Thanks, ladies and gentlemen, for the opportunity to talk to you about the Azure Minerals story. We're an Australian company listed on the Australian Stock Exchange, and we work solely in Mexico. We've got a market capitalisation at the moment of about $20 million, with $5 million in cash in the bank. Interestingly, in terms of our shareholdings, there's been a migration of our shares from Australia to offshore locations, so nearly a quarter of our shares are now owned in Canada and the US, and also we've got a very large German contingent with about 15% as well. So it's been an interesting reflection of the success that we've been having. Two main projects, Azure, which is the one I'll talk mostly about today, is a high-grade zinc, lead and silver project which is on the pathway to becoming a mine, and Alacran, which is silver, gold and copper, which we have in partnership with Teck Resources. All of the projects are located in Sonora and in Chihuahua in northern Mexico, so very mining-friendly jurisdictions, and from a security point of view, a great place to operate. But also, in addition to that, it's one of the great mining districts in the world. The two main projects are shown there in northern Sonora, Alacran and Azure. So this is a photograph of Azure, of the main hill which the mineralisation sits underneath. It's flat-lying mineralisation that wraps around where those buildings are and goes back underneath the hill. We've drilled over 150 drill holes into it, and prior to us there was another 100 drill holes put in there by Peñoles and Anaconda. We've completed the first resource on this project recently, just under 3 million tonnes of 7.8% combined zinc and lead. It's a very simple geology. It's flat-lying manto of massive sphalerite and galena, which we'll be exploiting by both open pit and underground room and pillar mining. Very standard sulphide flotation systems produce very nice clean concentrates. So the deposit itself is separated at this stage in two zones, an east zone and a west zone, and the purple that you can see there is the mineralisation that will be extracted via the open pit, and the red is the mineralisation that will be extracted via the underground room and pillar mining. And we've also been doing some drilling in what we call the central zone, in between the two main resource areas, and we've had confirmation that that mineralisation does extend and probably joins up completely between those two zones. You know, we're getting good hits of 4 to 6 metres wide, running 10, 20, 30% combined zinc and lead, and those intersections are at the most 40 metres below surface because the mineralisation is flat-lying and very gently dipping towards the north. All of the mineralisation is very close to surface. Just in terms of the size of this, we're looking at a zone there that's nearly 1.5 kilometres long east-west by 400 metres north-south, and it is very much open to the north as the topography rises to the north. The mineralisation continues in that direction. We've completed a scoping study or a preliminary economic assessment, and we're looking at a relatively modest size capital capex to build a mining and processing operation there of just under $52 million. The cash cost side of things are really good because the mineralisation is so high grade. It is at or very close to surface, and the mineralisation is so easily accessible that the cash costs to operate there are very low, and particularly in year one, where there's virtually no waste being mined, we've got cash costs of around 14 cents a pound per pound of zinc produced after lead and silver credits. So really nice year one, year two. That leads to a very quick payback period of the capex, so we're looking at a payback period of 16 months, and very strong rate of return, and the NPV is looking really good as well. From the point of view of the geology and the mining, as I said, it's massive sulphides that come to surface. There's no oxidation of these sulphides. They do outcrop at surface. You can crack them open. It's fresh sulphide mineralisation. So we're looking at a 6-year mine life at about 500,000 tonnes or 1,500 tonnes per day mining and processing operation, or mining and crushing operation. And that's a combination, as I said, of open pit and underground with about 3 years production from each, and very high grades there at surface. And the processing operation is fairly standard. We're looking at a crushing, grinding, flotation, filtration process to produce the zinc and lead concentrates. But there is one difference in that, and it's after the crusher and before the mill, we have an ore sorting process which is called DMS, dense media separation, which is a technique which is used to separate high-density sulphide mineralisation from low-density waste. And that, as a result of using that single process, there is an upgrade, or about 40% of the feed material is rejected as barren waste, and therefore there's a 40% upgrade of the grade. So we're feeding a grade of about 8% combined zinc and lead into the crusher, and we're feeding a combined grade of about 12% zinc plus lead into the mill. And that means that the milling process and the flotation process is much lower in terms of capex and opex, because it's only 800 tonnes per day. Produces very clean concentrates. There's no deleterious elements in this material at all. It's basically pure sphalerite and galena. We're making good annual production there of about 19,000 tonnes contains zinc in the concentrate, 10,000 tonne of lead as well, and the silver goes with the lead. So very high grade concentrates, very clean concentrates, and they're actually creating a significant level of interest from all of the metals trading organisations from around the world, and who seem to be at this stage beating a path to our door, and we're entertaining site visits for a lot of those companies over the next few weeks. So where is this? It's located in northern Sonora. It's about 6 kilometres off the highway, and then it's by highway 330 kilometres to the port of Guaymas. And Guaymas is a port which exports bulk mineral concentrates for a lot of other companies at this stage. And from there, it could either go via road to the lead and zinc smelters at Torreon. It can go down to the Manzanillo port, which is the major metals and concentrate loading facility in Mexico, where all of the major trading companies have warehousing and blending facilities, and hence off to Asia as well. So from the point of view of access and infrastructure, it's excellent. So the timeline on Opazura is really interesting. We only acquired this in August of last year. We paid $1.5 million cash to own it 100%. There is a 2.5% royalty back to the previous owners. So within the last 15 months, we've completed the mineral resource, the initial mineral resource, in July of this year, and there'll be an upgraded mineral resource coming out in the first quarter of next year. The scoping study came out last month. That PEA is now up on the website and available, and it shows, as I said earlier, some very, very positive economic outcomes for the project. The PFS is now underway, and that'll be completed in the middle of next year, followed by the full feasibility study by the end of next year, and all going according to plan. We'll have construction and then production by the end of 2020. So 2 years from now, the intention is to be in production. And just very, very briefly about the other project, Alacran, which I mentioned at the beginning. It's located in the northern part of Sonora. It was originally owned by Teck Resources. In 2014, 2015, Teck was going through some hard times. They pulled out of Mexico, and we approached them and convinced them to sell the project to us, and we acquired that project. We had to spend $5 million in the ground to actually earn 100% ownership of the project. We had some great exploration success. We discovered an outcropping silver deposit, 32 million ounces of silver, 150,000 ounces of gold, high grade at surface. And that excited Teck so much that they elected to exercise a clause in the agreement, which was a clawback. And so they exercised that about 2 years ago in late 2016. And we spent $5 million to earn 100%. They are now spending $15 million to earn back 65%. And they're in the middle of doing that at the moment. They've got 2 rigs drilling on a porphyry copper target that's adjacent to the epithermal silver mineralisation that we found. They're very busy drilling on that porphyry copper target, and there should be some results coming out of that in the very near future, in the next month or two. But interestingly enough, if they find something that's really good, that's up to a standard of a Teck-sized deposit, we will end up with owning 35% of what will be a tier 1 copper deposit, and that will be a significant benefit to the company going forward. And we can either contribute, or we can dilute, or we can monetize that 35% in some way. So there's a lot more news to come on that one, on Alacran, but it's very much a sleeper, but a good news story. So from here, we're in good commodities, in precious metals and base metals, fairly stock standard commodities, in a good mining district. We got a clear pathway to taking Opazura through to production within 2 years from now. On the Alacran project, we're free carried by Teck for the next couple of years of major drilling expenditure, and from there we can decide what we want to do with our share of the project. And there's a lot of exploration upside on all of these projects, and it's for our company, we're in a really strong position at the moment. Money in the bank, good projects, clear pathway ahead to production. And with that, I say thank you very much.